Hey everyone, welcome back to my channel. My name is Jen and I talk about everything money, business and investing. Today we're going to talk about how to start your share investment journey and why you should do so. Okay, so the three main types of ways to invest in shares is either through a mutual fund, ETFs, or investing in individual companies. For beginners, I'd recommend investing in ETFs rather than individual company shares. The reason is because ETFs are more diversified. They represent the shares of a whole heap of different companies rather than one. If you're trying to pick individual company shares, you're more likely to get it wrong. The likelihood is you're just a normal person with a normal job. You don't have heaps of time to spend researching all these companies and trying to pick which stock or share is going to give you the better return. Even people that trade shares for a living get it wrong most of the time. So investing in individual company shares can be very risky. ETFs stand for exchange traded funds, and they are a group of different shares all held together in different companies that try to track the performance of a group of companies. So for example, you've got the Vanguard S&P 500 ETF that tracks the performance of the top 500 companies in the USA. You've got the Vanguard US Total Stock Market Fund, which tracks the performance of the whole group of stock market companies in the US. You've got the Vanguard Growth ETF that tracks the performance of the top growing companies in the US. And then you've got ETFs that track the performance of companies in different areas, for example, IT and healthcare. You can have ETFs that are high dividend yielding ETFs that invest in companies that tend to pay lots of dividends. It's a good idea to diversify your portfolio, so don't just invest in one type of ETF, invest in different types of ETF. So I've got shares in an IT ETF, I've got shares in the Vanguard Growth ETF, and I've got shares in the high dividend yielding ETF. All of these have grown at different rates. Had I just bought one type of ETF, I might have been unlucky and not seen the type of growth that I have seen in my investment. So why should you invest in shares? Number one is that long term, you can get a much better return than you can if you had that money sat in a bank. This is because investing in the share market tends to keep up with the rate of inflation, whereas if you've got money sat in a bank, it doesn't keep up with inflation. So long term, you're actually losing money. Number two is that you can get started investing in shares from, if you've only got $10 in the bank. You can start with very little money. The more money that you invest in shares, the higher returns you'll get, or potentially the higher losses you'll get. But if you're in it for the long term, which you should be, share investing isn't a short-term thing. Do not think that you're going to go in there and you're going to buy and sell shares and make money. If you want to invest in shares, you've got to come at it from a long-term investment mindset rather than a short-term gain mindset. Invest little and often, and always think about it from a long-term perspective. So how do you invest in shares? Download one of the popular investment apps like Hatch, SHARESIES or Tiger Brokers. Choose one that is low fees. All of them are actually quite low fees. The lowest fee one is SHARESIES, followed by Tiger Brokers and then Hatch. I actually use Hatch myself because I just like the layout of the app, and I don't actually invest that often. I tend to save my money up and then invest all in one lump sum. So Hatch charge $3 per investment transaction up to $30,000, and then 0.1% fee in any investments over $30,000, whereas SHARESIES only charge 1 cent for every investment transaction. or $3 if you're investing over $10,000. I'll put a little summary on the screen now of the different fees involved so you can take a look. What I would recommend is, if you're just starting out, is to set up an auto payment for every month or every time you get paid that will transfer money from your bank into the investment app, and then set it up in your investment app so that it auto buys shares every month or every 2 weeks, so that you don't forget to log in and invest in the shares. It is a good idea to invest over a long period of time rather than a big heap at the start, because if you invest and if you try and time the market and buy at a low point and then thinking you're going to sell at a high point, the chances is that you're going to get it wrong. The lowest risk approach is to invest little and often every month, buy some shares, however much money you've got available, and then it's like a dollar average investment strategy where some months, yes, you'll buy at a high price, but then other months it'll be low and it'll all average out. Top mistakes to avoid is do not overtrade shares. Do not go in with a short-term mindset thinking, oh, the shares look low this month for a particular ETF, I'm going to buy them, and then thinking that the following month, you know, the share price is going to be high and you're going to sell. It might work once or twice if you're lucky, but the likelihood is that you will end up losing out. The best strategy is to go in this with a long-term mindset and invest little and often. Another big mistake that beginner investors can make is that they are emotional when they come to investing. So they might invest 1 month, say, and then they log into their investment app and then they see that the value of their shares has gone down. And they think, oh, quick, I've got to sell these shares before I lose even more money. Well, the thing is that you don't actually lose money until you sell the shares. So as soon as you've made that decision to sell the shares, what you're doing is you're crystallizing that loss and it becomes an actual loss. It is not a loss until you sell the shares. So keep the shares, keep investing, and then long term, your investment will go up, it will grow. Do not sell the shares at a loss. Keep your nerve and then you will get good returns. Do not ignore research. So the research suggests that if you try and pick and choose individual shares, the research suggests that you will get it wrong, and it is better to invest in ETFs long term. They will outperform individual shares. Stick with larger popular ETFs like Vanguard. Vanguard have got a whole different number of different ETFs. They've got the S&P 500, they've got the growth ETF, they've got an IT and a high dividend yielding ETF. So take a look and just choose a few of the popular ETFs and invest in those ones. Another mistake is that you invest money and then you need it really quite quickly. So do not invest money in shares if you need to then pull that money out for a certain thing. You know, you need to be investing for at least 6 months, I would say. Do not go into it if you need to buy a house, for example, in 6 months' time. So I started investing in ETFs about 18 months ago, and I don't have like this big amount of money invested, but I have a decent amount, and I've seen a 42% increase in value, which is amazing. In my opinion, now is the time to invest in shares because we're in a recession. The value of the shares is quite low and it is only going to increase in the next few years as the economy pulls itself out of the recession. So I'm going to switch to my phone now and I'm going to show you how much money I've made in the last 18 months investing on Hatch. So this is a view of my Hatch account. You can see I've got $3,500 invested in it, and you can see that I've made 42% gain This is over an 18-month period. I started investing in May 2023. If we can switch to show that amount in New Zealand dollars. So you can see I've got 5,900 New Zealand dollars. Again, a 42% gain. And I'll show you what I've got that invested in. I've got the majority of it invested in the S&P 500, and I have a very, very small amount in the US total stock market, and then a high dividend yielding ETF as well. On Hatch, you can set up accounts for your children, which I think is a fantastic idea. So if I just click on my profile up here and then scroll down, you can see I've got accounts set up for Sam and Ava. So I'll just go into Sam's profile, and you can see we've got 3,900 US dollars invested for Sam, which is about 6,500 New Zealand, and he has made a almost 32% return on his funds. We've got it invested in a mixture of things: the S&P 500 Vanguard ETF, the Vanguard Information Technology ETF, S&P 500 Growth ETF, a high dividend ETF, and then another dividend ETF, only a small amount in there. But I'm just trying to diversify the investment. And then I've got Ava set up as well. Ava's not got as much money. She is younger than Sam. She's got 752 US dollars, 1,200 New Zealand dollars, and she has made a 10% return. So if I just scroll down here and I look at, for example, you can click in to where it says S&P 500 Vanguard, and you can see that particular performance of that ETF. You can see over, for example, a year, how it has gone up and down. I mean, that would be great if you bought it at that low, and then, you know, it's gone up quite a bit since then. What it's showing you here is that the cost price when I bought those shares, that ETF, was 498, and then the current price is 532. Down here, you can see that it's paid some dividends, and you can see that these shares were first purchased in June 2024, which is just over a year ago. So Ava has made 10% in total return on her investment in just over a year, which is a lot better a return than it would have made in a bank. And with me, I've been investing for 18 months and I've had a 42% return, which is way better return on money than it would have ever got in a bank. So even if you've got just a little bit of money to invest, I highly recommend trying share investing via ETFs. Do a little bit of research. Don't just watch this video and dive in there, but highly recommend it. Even if you've got a little bit of money, then go for it. I'm not an investment advisor, just sharing my knowledge and experience here on YouTube. I'm going to put a link in the description, and if you want to install Hatch, the investment app, then we'll both get 10 New Zealand dollars to invest. And I'll just link to SHARESIES and the Tiger Broker app down below as well. Hope you enjoyed this video and you got some useful information from it. Please join me for my next video. Don't forget to like and subscribe. Thanks for watching, everybody. Bye.